Whether you're pouring the perfect beer, striking a welding arc, or keeping food fresh, McDanta, delivering the best in mixed gas solutions for over 35 years.
Hello and welcome to the 1895 podcast with me, Tom.
And me, Rob.
Rob, how have you been? I say approaching the end of the summer. We've still been amongst that heat wave that we mentioned a few weeks ago.
Yeah, 5 heat waves now in the UK summer?
Crazy. And well, we've been taking some time off between us, but great to get back in the studio here while it's cooled down a bit to chat more gas.
Yeah, always good to get back in the studio. And I did just hear this morning rumours of a 6th heat wave before the summer is out, so yeah,
let's look forward to.
Let's get in the studio and record while it's nice and cool.
But today it's been an episode we've been promising for a little while. We've done a few of these previously, generally a few a year, and this is because financial season has been and gone quite recently.
It has indeed. I was trying to think back to, because we kind of previewed this, didn't we? We talked about the upcoming financials. I couldn't remember what I'd said in terms of what to look for, but I'm pretty sure I mentioned margins, underlying volumes, and what the actual kind of performance or dynamics of the industry are when you cut away a lot of the messaging. So it'll be interesting to go through these now.
Yeah, so let's pick through them, and I think the best way to do these would be in the order that they were released. So the first ones that we saw from the majors, at least, was Air Liquide's, and that was on July 28th.
It was, yep. Important couple of caveats here. First of all, with these financials, we always talk in dollar terms as a universal currency. And the second is you'll hear different quarters and reporting periods here. That's because those major players are all working to slightly different kind of staggered fiscal parameters. So you'll hear about first half or Q2, and you might think, hey, I thought we're on Q2 and they're talking about Q3. They're just staggered differently with their reporting. But
So this is first half.
Yeah, so this is Air Liquide chose as well to focus very much on first half rather than the second quarter. Yeah. So first half 2026. What have we got, Tom?
So just a few of the figures here. Its backlog reached a record $6.8 billion. They had a recurring operating profits rising by 5.7% to $3.3 billion, while the operating margin also increased by 1 percentage point to 20.9%. Revenue increased 0.8% to $15.6 billion, although underlying growth was also stronger at 4.3% after adjusting for currency and energy prices. A few more figures from their financial release. Recurring net profit rose by 4.4% to $2.2 billion, while operating cash flow increased 3.7% to $3.8 billion.
Yeah, I think for me, there's 2 or 3 figures in there that are quite interesting. First of all, you've got that operating profit that you said of $3.3 billion was up 5.7%. You've got net profit of 2.2 billion in the first half, but crucially, if for me, one of the crucial lines there is revenue rose less than 1%. It rose at 0.8% to 15.6 billion. And for me, that's crucial because we're hearing here about underlying growth that is stronger. We're hearing a lot about the order backlog, aren't we? What a great position we're in. But actually, volumes are down. It's this theme I talked about, I don't know, it must have been a month ago with, the headwinds facing the industry. And we're hearing a lot about pricing management and a lot about productivity.
And just to touch on those backlogs that you mentioned there, electronics was the big driver for that, accounting for 40% of the total and representing a $2.73 billion investment. So that just highlights how big that industry, we knew it was going to be big. We've heard previously about how much the industry is going to do, but that proves it from this first half of 2026.
It certainly does, and there's some great analysis on the gasworld website around the industrial gas majors betting big on electronics and why. It's a great growth story at the moment.
I mean, great coverage of the entire financial season, I must say.
Absolutely.
There's so many stories on there and so much analysis. We're not going to be able to get into all of it today. But yeah, do be sure to digest that on the gasworld website.
And I expect we'll hear more about those electronics in the next set of results, or the next few sets of results.
Yes, no doubt. And talking of the next set of results, let's now go to Air Products, who released their results on July 30th. I think these are the ones that we were looking forward to most, weren't they?
Bigger stories here than electronics, certainly.
We'll get into that, but just to go over some of the headline figures, and then we'll dissect them. The big one was the Q3 financial results.
Fiscal Q3.
Yeah. Yes. Headline figure is that they posted a $2.1 billion Q3 loss, and this was down to exiting the Louisiana blue hydrogen project that we discussed a few weeks ago. I think.
No surprises here. I think we all largely expected this, and it's an operating loss. That project, a 1,700 tons per day, or TPD, Louisiana blue hydrogen plant, that alone, as we reported at the time, would be a $2.9 billion write down. So it was always going to impact these results. But for me, the one thing that stood out there is that it does mask a fiscal Q3 sales performance of $3.2 billion, I think it was.
Up 5%.
Yeah, so that's quite an interesting kind of hidden line in the middle of that story.
Yeah, and just to pick out some additional figures from this, a GAAP per share of $6.47. That's taken into account that $2.9 billion hit. In the America, sales of $1.3 billion, increasing 5%, and an operating income of $395 million, increased to 6%. So the big story there really is that loss, but the masking of that.
It is, and they've also revealed that they will be selling the assets or a lot of the equipment, or looking to redeploy it from that project, pointing to the fact that a lot of it is kind of made and done for a package project rather than by an individual kind of standalone equipment items. So very attractive assets for some people, some companies to potentially go and purchase if they are looking at big plant projects. But yeah, no big surprises there. And I think really it will be interesting to see in the quarters ahead and the years ahead where Air Products goes from this, so we can stop talking about those project write-downs, because it's been a couple of years now. We can stop talking about that. We can look at where the actual performance and the actual growth story is.
Perhaps we are entering a period of a bit of stability, which is what I think we're all hoping for. Just to pick up on the electronics theme that we're gonna run throughout this episode. 2/3 of Air Products' opportunity pipeline is down to that electronics space, and that opportunity pipeline skewing heavily towards the traditional chemicals and steel market, but remain largely focused on replacement projects as well.
Yeah, absolutely.
Into the third and final major, who released their results on July 31st.
The biggest major.
That was Linde.
It was, yeah. And this is straight up Q2 sales. So as you might expect, second quarter sales. And I think the highlight here was $9.3 billion?
Yes,
Q2
up
sales.
9% year on year. Again, continued demand from the electronics sector helping to drive this for another quarter of earnings growth. Q2 net income rose 9% to $1.93 billion. Operating profit increased to $2.6 billion. Adjusted operating profit reached $2.7 billion, up 7% year on year, with an adjusted operating margin of 29.5%. Seemed quite a strong set.
It did seem a strong set. I think when you dive a bit deeper, you can see that 2 or 3 sectors are particularly prominent. I'm not going to say they're underpinning it because that wouldn't be fair, but they're prominent. We've already talked about the electronic side of things, and we've also seen a whole swathe of announcements from Linde on new ASUs or plants related to the spec gas demand from the semiconductor sector. But we also saw, I think Linde cited the US as a bit of a hot pick market in that reporting period, driven by aerospace and construction, and ultimately construction of data centers. So again, electronics data coming through here. But yeah, aerospace and construction, I think aerospace over a third of manufacturing volumes, was it?
Yes, and that was an analysis piece by Sophie Gregory on the gasworld website. Well worth a read. And this is it's a personal favourite industry of ours, isn't it? The aerospace market.
It is, yeah. It certainly is, yeah. And you can just see how much that is propelling growth for the majors, and particularly someone like Linde in that quarter.
Yes, so that was all of the majors. Amongst that, we also saw Nippon Sanso reporting their Q1 earnings.
Double-digit growth across earnings and revenue in that fiscal Q1. And I think revenue was up almost 15% year on year to $2.2 billion. And the key thing for Nippon Sanso is it was almost at pains to point out is it's a stronger start to the fiscal 2027 year because it had some headwinds in the previous fiscal year.
Yes, we also saw that core operating income rising by almost 20%. Operating income also climbed by 42.1%, and net profit attributable to shareholder increased by 54%. Some big numbers there.
Yeah, some big numbers. Nippon Sanso has made some plays in home care in more recent times, making some acquisitions. I think it's said medical gas business line as a whole performed quite solidly in the period. And again, electronics, all about electronics.
Mm-hmm. So that's all the big sets of results. We've gone through the numbers, the facts and figures there. What do they all mean to you?
What do they all mean? I think for me, I'm going to call this a number of headlines and headwinds. We've heard, we just mentioned the quote about underlying growth was stronger. We've seen, I think it was in several of the financials, but certainly Nippon Sanso talking about higher margin on-site sales. We've also heard these terminologies around favorable pricing effects, which we see across the different disclosures. It's still an era of productivity and performance. It's still very much these majors looking at how they can be more efficient, how they can cut back on costs, and actually a lot around pricing management. So the kind of 3 or 4 points I wanted to make in those headlines and headwinds is we're still seeing a reduction in CapEx spend or a streamlining of CapEx spend across the board, particularly for some companies that are resetting in those areas like Air Products. We're still seeing the efficiency and productivity measures. They're pulling those levers as much as they can. That can't go on forever. We're still seeing underlying volumes struggling. I don't think any of the majors have really had a headline narrative around underlying growth bounces back or double digits. So that's still an issue that's kind of hopefully skirting under the radar, I think we might say. And then, a lot of these performances are propped up by pricing management and favorable, currency effects. And let's face it, the hot topic markets like AI and electronics, you can't escape that. So those are the key narratives coming out of it. And that does leave me with one or two questions, probably the biggest of which is where does the industry, where do the majors go from here? What's the next big growth story? It feels like we're already into, albeit early days, but into the cycle of the kind of semiconductor and electronics wave of growth. So what's next? Where do these companies find the next growth pillar to achieve double-digit shareholder growth? Because it's always been such an attractive industry. It's an attractive investment and safe bet. But where's that growth coming from? At the moment, we still see a lot of the same buzzwords or, end-use applications being mentioned.
And when do you think it would be that we start to see maybe an answer to that question? We'll be no doubt sat down here again in 3 months' time at the end of Q3. likely won't have an answer by then. But what sort of a time period do you think these majors will be working on?
Well, I wish I had a crystal ball for that, Tom. I'm not sure. I mean, the thing is, I don't want to say the industry's in poor health. You only have to look. I was reminding myself of this morning. You only have to look at all of the project announcements that keep coming out, new ASUs across the US, across Asia. There's plant activity going on. A lot of that will be coming on stream in the next 12 months. There's a lot of 2027 projects, realizations. So there's a lot of nameplate capacity out there. The industry is very robust, largely non-cyclical. So it's always got growth pillars, whether that's in medical and healthcare or food and beverages or big industrials like steel and chemicals. It's always positive, always healthy. But where's the next big story coming from? We've heard about various different ones through the years. We've had various different hype cycles as well through the years, and the industry did well not to throw all its eggs in that basket largely. But yeah, if it's betting big on electronics, as our analysis said in recent weeks, what is the next big bet? And I'm not sure we see any signs of that yet.
Well, whatever that big story or that big bet is, we'll no doubt be covering it here on the 1895 podcast, and we'll have coverage of it across the Gasworld website as well. Well, Rob, thanks for joining me. Always great to pick through those financials. Always an intense episode, isn't it? And diving into those numbers.
It is, and it can always feel like you're looking for the bad messaging or you're looking for the underlying stories. But yeah, there's lots to pick out, lots to keep talking about, lots to look forward to.
Yeah, and as we said earlier, be sure to read all of that analysis and all of that coverage on the Gasworld website, because we haven't quite done the full analysis we've done as a team.
We haven't done
quite justice, have we?
Yeah.
But we've got a busy few weeks ahead, don't we? Next week, I don't think you're able to join me for it, but we've got an interview coming up with H2 Fly, which will be interesting on the hydrogen aviation industry.
Seeing that take flight, yeah.
Very nice. And plenty of CO2 always seems to be CO2 content, but we've got our event just around the corner, so we'll turn our attention towards that.
We said we'd not been in the studio for a couple of weeks, but it feels like we're about to head straight back into that event season into full force, aren't we?
I think we certainly will. But yeah, thanks for your time. Thanks for listening, everyone. In the meantime, do please like, follow, and share the 1895 podcast, and we'll be back again next time.
Whether you're pouring the perfect beer, striking a welding arc, or keeping food fresh, McDanta, delivering the best in mixed gas solutions for over 35 years.